Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, July 7th, 2008. Well, I hope everyone had a long weekend as the markets were closed on Friday in observance of July 4th, and I want to get right into things today because we're in the midst of our turn signal period for the markets over the last, from ever since Thursday where the markets were open, and today, Monday and Tuesday, is our cycle date turn period where we basically isolated based on price pattern and time discoveries and analysis an area where it looks as if oil not only is topping out, which we saw a little bit of today possibly, also the markets look to possibly get a bid. Now today was an absolutely wild whipsaw day. Usually after a holiday weekend you get somewhat of a hangover effect, what we call a hangover effect. And that's really where a lot of people are still on vacation, people aren't really trading full steam ahead, but today that was not the case. Early on in the day, you saw a little bit of the lighter volume, but the whipsaw just continued to whip this market up and down in every which way, and it basically caused a good volume explosion. For a day of a Monday following a long weekend, it was a very good volume day, and the markets traded up first, then down hard, unbelievably down hard, then rallied back to the flat line, and then closed slightly lower on the day. And what you're seeing here, in our opinion, is that fight between the bulls and the bears, between the longs and the shorts, as everyone's trying to figure out exactly which way the markets are going to go and which way is going to win. Now, obviously, you guys know our turn period is at this point where we're looking for a bottom to be put in the market, and the whipsaw trading is often an indication that that's trying to be found. All right, but again, we'll have to see, and once we do see it, we want to see confirmation, as we are very cautious at InTheMoneyStocks.com, and we never, you never jump full force into any type of move expectation. So, long story short, we're going to get into the charts here, but I want to go over the indexes quickly here. And the Nasdaq was down about 2 points, barely budged at all by the end of the day, even though it was up as much as 25 early and down 25 in the mid-afternoon. It really closed flat on the day, just down 2 points. The Dow was down about 56 points, and the S&P was down about 10 points today. Now let's look at the market, because you can really see here in the chart where things were going crazy. Now, early in the day, you had oil starting to fall, and this is where the beautiful oil trade comes to fruition, because you guys know that, obviously, as we mentioned last Thursday in the video, if this turn period is going to come to fruition, not only do you need the oil trade to work out, but you need the dollar to hold strength, and you also need the financials to participate. Today, we only had one of the three participating. And what do I mean by that? Well, the dollar was strong early and then started to fall. Oil was pretty much weak all day, even though it rallied at middle day and then closed off the lows, but down nicely, about just underneath $4 on the day. Oil closed down. But the key here was financials. Financials weighed on the market tremendously, and we're going to look at that. But what you're seeing here early in the day, and this is right around the open of the markets right up here, is the market gapping up. And on the SPY, you'd see a gap up. On the futures, you don't see a gap up. You just see a climb. And here's the market trading. And all of a sudden, from the opening prints, you start to sell off. And the key here is you reach the 50 moving average, and once you break that 50 on the intraday ES, and this is the S&P future chart, 10-minute intraday, you really start to collapse. And this fall is dramatic. I'll be the first one to admit it. This actually was almost mind-blowing because this is all during lunch. And usually lunch, especially on a day after a holiday, you have that light trading volume. Very light, kind of just a wishy-washy market. This did not happen. Look at this fall here, folks. And the key here, and I want to show you this even while we're looking at the chart of the ES, what I want to do is flip over to the financial ETF, which is the XLF, and I want to show you something. That fall occurred right here, and this price happened to be the 52-week low of the XLF. So we're looking at the XLF intraday now, and I want to just kind of coincide the chart with the ES future chart so you can see the moves in the market and what happened. Well, here you are banging on this level, and this happened to be 1957 level support, which is the 52-week low on the XLF. Now, once you started to sell, once you broke this 52-week low, it fell apart, and that's when the markets really started to tank. And in fact, not only did you break down, but you bounced a little bit and then broke even lower. You got a little bit of a bottoming tail to come in right here, and let me erase this line so you can see it. See the bottoming tail down here? That low that was put in was basically the low of the day. And what you can see here is if you bought on the break above, you can hold. You're never getting stopped out because you're not taking out the low of the day. And sure enough, you get a rally nicely up, right up here into the 50 moving average. And right there at the 50, notice how perfect that is. right at the 50 on the XLF, which is the financial spiders, you see the sell-off start, and we sell off right into the close, last 20 minutes of the day, right here into the close and the 20 moving average. Now, notice this sell-off right here, starting right around 12:30, and then let's go back to the futures. The futures chart right here, 12:30, and once that XLF breaks down, you get the hard sell on the futures. Now, notice the bottoming tail possibility right there, and then you basically form a nice little bottom in it, and then you finally break up into the close. This buy program, by the way, folks, was immense. Look at the volume here on the buy program. Absolutely fantastic buy program volume, but nonetheless, 20 minutes before the close of the market, a few sellers came back in and they pushed the market down. So nonetheless, you kind of look at this day as a neutral day. You had the market gapping up and it couldn't hold that because of the financials and the dollar. Oil was trading down pretty much all day, but also oil, when this was falling here, oil was rallying, by the way, because the dollar was under pressure. So you had oil nonetheless down on the day, so that's one positive, but you had two negatives here. You had the dollar index slightly weaker, and the big thing here was the financials. The financials could not catch a bid all day until the late day jump in the markets where they did finally catch a bid. But either way, you still had Goldman Sachs closing down $9. You see Goldman Sachs, which is basically the barometer for the financials, down $9. There's a problem out there in the financials. So the question will remain, and this is where it's really going to come in, folks, is that which one gives way? Do we have oil still continue to come down these next few days? If it does, that'll give the markets an underlying bid. But if the financials don't catch a bid and they just continue to sink like this, is it even going to let the market buoy itself? Because notice what you had today. You had oil down nicely, but the financials getting hammered as well as the dollar. And the three of those basically canceled each other out, and you had a slightly negative flat market by the end of the day. So that's kind of the key you're seeing here, is that you're going to need participation from oil to drop and the financials to give way and start to rally, and then the markets will rally up. So those are the two pieces of the puzzle you want to really follow. Follow the XLF and the USO. USO you want to be down, XLF you want to be up. You get those two running in the same direction, very likely have a major rally on your hands. And that's what we are following right now. Now, overall, the one bright spot out there in the markets, aside from the falling oil price, was technology. The NASDAQ, again, just down two points on the day. Google was up $7, Baidu was up 12, Apple was up 5, RIM up a fraction, and Amazon up a fraction. So the large cap tech players out there did very, very well today. But in the financial section, Fannie Mae and Freddie Mac got pounded today. FNM is just one of them here. And you can see on the chart, look at this drop here. This is today's drop on the daily chart. Absolutely hammered. Look at the volume out there. And there's a lot of problems out there still to deal with in the financials. The question really remains, you can have good news in the near term to cause the rally that we're expecting or the bounce that we're expecting with a coincidence of oil falling, or do we see more lows on the financials before you get a bounce? Looking at the XLF daily, and this is what gets really interesting, you can see we made a new low as we had talked about, and once we broke that, that's when the hard sell came in the market, but you rallied off the lows a little, and we really have to watch this now. What's going on here? Are we breaking to new lows? Are we going to break up? One thing I will say is you're really going to have to touch the 20 moving average at some point soon. Home base needs to be gone back to. So we will keep a watch on that. And I just want to show you a couple other chart patterns developing here. And I want to go to the SPY and show you where the SPY bounced off the lows today. And I'm going to switch to the monthly chart to show you. Now, one thing you guys know is we're testing, and we'll go to the weekly first. Let's go to the weekly here. Okay, here's the weekly chart, and you can see that we're basically testing this low area right here. This is the basic support line you're looking at in the near term. But the low on the SPY was 123.92, which was all the way down even lower. And at that point, it looked like an ugly breakdown in the markets, to be honest. And I want to show you the monthly chart and draw the line back to show you where we came to. Alright, here's the monthly chart. Now, if you take the low here from the candle today and you stretch it over, look at where that's coming into support. The low from this period right over here in mid-2006. And look at the bottoming tails that created off of that and the run that we had in the markets. And that's amazing to note that, folks. Look at the bottoming tails. You had two bottoming tails next to each other right into the 20 moving average, and then off to the races you went on the monthly chart. But my point here is that the area we rallied off of was a key support level going back to that bottoming tail lows. Alright, and the lows of those bottoming tails were about 10 to 20 cents lower than where we hit today, but nonetheless, on the monthly chart, you can see that support coming in. So that's the next support you want to look for on this chart. Right around that 123.75, 70 area, right around those lows should be good support where we rallied off of today. And we're going to have to watch to see if we do get another bounce off that level, if we even retest that level. Alright? there's definitely more issues out there in the financials, and I can't stress that enough, and we really want to focus on that. Alright, so let's go look at the financial XLF a little more. Now, what I put up ahead of you guys here is the XLF on the monthly, and I love time frame analysis, folks, because you go from small time frames like the 10-minute intraday all the way as big as the monthly or the yearly chart, and you can really see some fantastic support levels. Look at this fall on the XLF monthly, and then look at the support we're hitting into now. And this is another reason why you want to watch for the financials to either flush through the lows here or to rally off those lows. Now, if we break the lows there, that's not necessarily a bad thing. You could be flushing out weak hands that have stops right below there. And right around $18.75 would be that low. So watch for that key area to be hit as well. Alright, so again, a beautiful chart here showing that we are hitting support going back all the way to 2002 to 2003. Alright guys, an interesting day. Keep watch of our last turn date tomorrow. We'll see if the bottom's made. Have a wonderful day. We'll talk to you soon.